Hi, I'm Alice Benner, Principal and Managing Director of Bamboo Equity Partners.
I'm Brady Gehring, Principal and Director of Capital Markets for Bamboo Equity Partners.
My name is Dokovic, and I'm Managing Principal and Founder of Bamboo Equity Partners. Some might say we're crazy for trying to predict what's going to happen in 2021 after a tumultuous 2020. However, we believe that COVID has not created new trends, but has showed that the trends are accelerating as a result of the coronavirus. The impact of COVID-19 is going to be way more pronounced in 2021 in commercial real estate than it was in 2020. The reason for that is it usually takes a certain period of time for lenders, for borrowers to get used to the new normal. And as we have seen in the Great Recession, that took about a year or two to happen. There's going to be clear winners and losers in commercial real estate investments this year. Retail and hospitality are going to be the losers this year as they were in 2020. The winners are going to be industrial, data centers, life sciences, and a completely brand new asset class of single-family rentals. Work from home will persist this year. The companies are trying to weigh the risks of introducing people back to the office compared to the higher productivity. The larger companies especially are at the risk of public exposure for bringing their employees back to the office. Therefore, in the large cities, 24/7 cities, and large companies will probably leave their employees at home until at least mid-2021.
We're going to see another year of historically low interest rates. As of the time of this filming, this has more or less been confirmed through recent comments made by the Federal Reserve and Treasury Secretary Janet Yellen alike, both of which have come out with a dovish outlook on the 2021 market. We think deliberate actions will be taken by the Federal Reserve to remain accommodative on monetary policy, which more or less should provide a favorable backdrop for commercial borrowers and hopefully lead to an economic recovery throughout the year. We're going to continue to see a decline in some of the U.S. major metropolitans. It should really come as no surprise that some of these major cities, the likes of New York, Chicago, San Francisco, Los Angeles, have become increasingly expensive and quite frankly have outreached the capacity of middle-income Americans. As major corporations and businesses alike move to work-from-home policies, and with that compounded by public healthcare shutdowns, we're finding that individuals are putting more emphasis on cost of living, quality of life, and reconsidering living in these major metropolitans. As such, we think we're going to continue to see a bit of an exodus from the major metropolitans to secondary markets, the likes of Austin, Texas, Nashville, Tennessee, Raleigh, and Charlotte, North Carolina, Salt Lake City, just to name a few. We think a bit of a catalyst for this, and even evidencing our prediction for 2021, is also that some of the major corporations in the U.S. have already taken a step towards this. Just look, for example, at the CBREs, the Teslas, the Oracles, the Hewlett-Packards. They've already made these initiatives to move out of the major metropolitans. Suburbs are going to become cool again. While it might have been hard to believe 5 years ago, these millennials that everyone has so many opinions about are growing older. They're getting married, they're having kids, and quite frankly, they're outgrowing their downtown condos. They too are looking for a better quality of life. They're looking for more affordable education, access to space. As such, we think this is going to have a huge impetus on single-family housing markets. We think that this millennial exodus, if you will, back to the suburbs could lend itself to a very strong single-family housing market in 2021. So much that we could potentially even see this become its own institutional real estate class.
Inequality will continue to be all around us. Google, Amazon, and Home Depot and Walmart will continue to see huge increases in revenues, while mom and pop, strip centers, as well as restaurants and hospitality will continue to suffer. The lack of affordable housing will become even more prominent. Restaurant workers, blue-collar workers, as well as hospitality workers will no longer be able to afford the Class C apartments that they normally would, leaving a gap in affordable housing as well as many defaults in those rental payments. Environmental, social, and corporate governance will continue towards the mainstream. More and more investments in sustainability as well as green infrastructure will continue to be prominent. There's going to be a rise in mainstream alternative investments. Both institutions as well as high net worth individuals will see that the pandemic has created a lot of value in investing in data, healthcare, as well as distribution. Institutions and individuals will buy data centers, manufacturing and distribution centers, as well as medical facilities to capitalize on the pandemic.